Got it.
Good morning, Laura. How are you today?
It's another fabulous Tuesday, and I'm happy to be talking to you because we have just interesting and exciting things to talk about with.
We do? Oh, good, good. Like that right too. But let's begin with introductions. I'm Michael Kirkanic, Macintosh Realtors. Been in the business for about 20 minutes now and really excited to see how my career goes. No, not
Yeah,
20 minutes, 20 years.
but it's a whole new world. Every day is new in our business. That's why we're never bored, you know?
Every day I'm like the baby that's being born. I wake up crying and hungry.
That's it. So that's all good. You want to be hungry so that you go out and do good work for people. So
Yeah, but the tears, Laura, are just really, really just coming down in buckets. So, but what are you gonna do?
tissue.
Yeah, thank you. Thank you. Laura, how about you? Who the heck are you today?
I am Laura Fournier still
Oh, good.
for quite a few years now, but we're not counting. It's okay. And I'm with Nations Lending. We do lend for the purpose of purchasing or refinancing a mortgage all across the nation in all 50 states, and love to help people reach their goals of home ownership or improve their finances if they already own a home and they're talking about refinancing. Not much refinancing going on at the
Oh,
moment,
no.
but
No, not at all.
there
Not at
are
all.
some people that have to because of life situations that come up. So there are still a few out there that we're talking about, but not many, not many.
I know. I know. Well,
So,
listen, so the big news, of course, this week, Laura, is that last week, the Federal Monetary Policy Committee raised interest rates 75 basis points for the third time in a row. They're saying that they're going to hold firm on this through or into 2024, so at least another 18 months minimum. So what does that mean for the public, Laura, as far as interest rates go, this third consecutive increase?
well, it hopefully in the next quarter or so, maybe the first of the year, we'll probably start seeing rates hopefully starting to come back and inflation being pulled down. So it's lower going down. Mortgage interest rates follow inflation. So if inflation is increasing, rates are increasing. And that's why we've seen rates double this year because, we had a inflation rate close, not quite 2 years ago, but almost 2 years ago, 1.4%. And now we're at, I think it's 8.3 or 8.6, or somewhere in there.
Yeah.
And so rates have doubled. But I was hoping when the Fed did that increase, that 0.75 increase, I was hoping we would have seen rates actually get better, and rates have absolutely tumbled. They were down 163 basis points yesterday. Our lock window froze. I couldn't even get pricing on certain types of loans at all. It was a wild ride. It's like you're on that roller coaster and you go ching, 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 and then you're at the top of the hill.
Yeah.
And then it was just like,
Yeah.
when the bond market is going down, rates are actually going up.
Right.
So it was a hard day to stomach yesterday. And so we'll see how we continue to go. But I'm suspecting we're going to see rates get worse in the short run. And then if we can get the government decides to stop spending like drunken sailors, then probably the Fed hiking those interest rates will, over a little bit of time, will help pull back inflation and rates will come a little bit.
Okay, so where do you see interest rates going for the rest of the calendar year? You think they'll hit 7.25%, or you think they're going to be stable at about 6.5%?
While on some loan products we're already in the sevens.
Okay.
Down payment assistance programs, some of them are priced in the low sevens. Our bank statement loans, those loans that don't follow Fannie Mae, Freddie Mac rules are already in the upper sevens and low eights. So some of the products are already there. Most of your Fannie Mae, Freddie Mac products and your FHA, VA loans are in the sixes, but they're pushing seven, low seven. And we
Okay.
could see that stay there or get a little bit worse, I think. So
Okay,
just in the short run, in the next few months.
okay.
But like I said, if the government can stop their spending spree, as if just printing money solves everything, which it doesn't, it just adds to inflation, then I don't know if the Fed will be able to increase the Fed funds rate fast enough to keep up with the spending. They're just kind of contradicting each other at the moment.
Yeah, and I know that it's been tough for first-time home buyers. From my perspective, Laura, as a realtor, what I'm seeing is that my clients who are buying properties, I had one where a client about 3 weeks ago, we submitted an offer, we were competing, and they were at 5.25% interest rate. We didn't get that property. Last week, we submitted another offer competing against other buyers, and his interest rate was 6.25 just in the last 3 weeks.
Yeah.
And so what happens is that the monthly mortgage, the estimated monthly mortgage based on that interest rate is higher than it was just 3 weeks ago. So what my clients are doing is factoring in now how the increase in interest rates are impacting their household budget. Now they're really doing the math and they're really relying heavily on lenders to help the buyers with the estimated closing costs and the estimated monthly mortgage. And on a couple of my clients, instead of looking at $300,000 houses, we're looking at $275,000 houses, So we've had a big impact on the real estate side of things.
Absolutely. It's a big impact. It's a lot of difference between the payments at 5.25 and 6.25. Or if it goes up, even higher, it's a big impact on those interest rates. And but the good news is they're not stuck with their mortgage forever, probably as long as they keep their credit well, they make your payments on time and all that good stuff. When rates do come back, we'll happily refinance them to the new lower interest rates. And that's one of the reasons why pricing and costs on a loan have gone up, because the lenders are now not offering options without points, because they know that as soon as rates do come back, and they probably will eventually, they'll lose those loans off their books. So they charge upfront points so that they're not in the hole when those loans pay out. If they paid out, in 6 months or a year, it would be a loss to the lender.
Right. So what are you telling your clients, Laura, about locking in interest rates? And are you telling them to lock in now, wait a little bit? And
Well,
if so, how long, as a follow-up question, how long is a lock on an interest rate?
well, you can lock once you're under contract. We don't not or it's not available yet. I'm not saying it won't come back out, because they have been available in the past, like lock and shops, where you can lock in a rate and go shopping as when you have a window there. But we'll see if it comes out soon. But so when you get your contract and you've negotiated that contract and it's all ratified, then you match the lock period to the contract. So 30 days or 45 days. And then you go to settlement in that time frame. Now, I did have a customer, and for reasons of the property, the deal could not go through. And I had to tell him that he doesn't get to keep that interest rate, because he was locked at a lower interest rate, but that interest rate gets locked with that contract on that property. And since that fell through, no fault of the buyer, then he's subject to the market again,
Mhm.
and it was quite a bit different. He's like, well, why can't I keep that?
Mhm.
I was like, "Mm, that's how it works. Not to mention that we would only have like whatever a day or two because his lock was matched up. So, but yeah, it goes with the property with the contract. You don't get to forward that on if something happens to the next deal. So
Okay.
sadly, the lenders have to do what keeps them in business. So that's the way it rolls on that one. But
Mhm.
you have to explain those things and tell them how certain things work. And we're still not in rates that are they're onerous because mentally we're really tied to those rates that we had for 12 years, and they were so unbelievable, and it gave a lot of people a lot of buying power and
Right.
opportunity to get into a house, which is why there was a boom in housing, was because so many more people qualified because the rates were so low. And
Right.
now we're back to normal. These are more normal interest rates where we are in the sixes. That's very, very normal. And, so there's people that don't want to qualify at that interest rate because it pulls down their buying power, or they, if they can qualify, their payment's going to be higher. But if they qualify and they can afford the payment, it's still a great time to buy. You have less competition, less
Mhm.
people out there fighting for a house, so that's going to be helpful.
Right.
And you can, for the most part, refinance when rates do come back.
Right. I think that's a good perspective there, Laura, is that, just lock into what you can. This is the house you want, lock in. And, your lender should follow up, post settlement on when the interest rates go down and when might be a good time to refinance. Absolutely.
Yeah, and the lender's gonna have you make at least 6 payments on time. And then, we'll check the market and then see if there's a benefit. We only refinance if there's a benefit to the borrower to
Mhm.
refinance.
Yep.
We cannot put them in a refinance if there's not a benefit, a financial benefit for them.
Yep.
And, we've talked about this before, but it really bears to say it again, that my first house I bought was at 11% on a 30-year fix. And, and we're still talking for the most part somewhere in the six-ish range.
Yeah.
So that's almost half of what I paid, all those years ago.
Well, and
So
what I'm seeing from my buyers, Laura, is that from the real estate perspective, is that um, when we first started looking, rates were at a lower amount, so inventory's been just terrible, and so whatever slim pickings were out there, the buyers were already, working with their household budget, saying, okay, well, we can do this, we can do that, and then now they're readjusting their sights and they're getting extremely frustrated. They're being frustrated because now they're paying more for a house that's a lot less than when they first started looking.
yes, and I think we've tried to explain that waiting is the enemy of the buyer for the most part, and has been for several years now. Waiting just means you're going to pay more for the same house that you could have bought last year. And now you're not only paying more in the price of the house, you're paying more because of the interest rate. So that's double.
Right.
Last year when we were encouraging and showing the figures on why escalate, it's a lot easier to escalate on at 3% or 3.5% or 4%.
Mhm.
Then now, if you're still having some competition and you have to escalate, not as much, but still maybe a little bit, and you're at whatever 6.5 or whatever the number is.
Mhm.
So, and it's still holding true because there's absolutely a housing shortage. There's more buyers than there are supply of houses. So,
Yep.
And there's still, for most markets, housing appreciation. So you're going to see between 2 and 5% on average, which is a very historical, normal rate of appreciation on houses.
Mhm.
So it's still the time to, if you can afford it, if you can afford the payment and you're ready to be a homeowner, to buy a home. It might be your starter house. And a starter house is just that. It's where you start in the game of home ownership.
Mhm.
So your starter house is probably not your dream house, and it's probably not your final house. It's just where you start, you enjoy it, you start creating your memories, you start building equity with every payment. The market is going to give you the gift of some price appreciation over time. And then in whatever, 3, 5, 6 years, you sell, you use that appreciation, you use that equity that you've built through your payments. And now that second time around, you have a much bigger payment than that 3% that got you into your first house. Maybe you have 10% down, maybe you have 15, and that propels you into that higher price range where you're getting more amenities, more square footage, you know,
Yeah.
nicer, whatever you like.
Right, right. I think that that's well said, Laura. I'm seeing things on the real estate side regarding sellers. Sellers, if they're priced right, then they should still have some competing offers and multiple offers. Maybe not as many as back in the spring, but still, if it's priced right. Some people still testing the market. You know, it is autumn. And we are seeing a slowdown in the number of buyers also as they gear up for school year beginning and the holidays coming up in a couple months. But
Mm-hmm.
there are still buyers out there. I'm seeing sellers still testing the waters, wanting to get a little bit more in a house, so they price it a little bit high. And I'm seeing buyers getting a little more savvy as far as making offers. If their agent has done comps and the comps show that a listing is overpriced and it's been on the market for at least 2 to 3 weeks, then they're not going to come in full price. They might and ask for a seller contribution towards closing, or they're going to come in lower and just say, hey, well, we'll still do an appraisal, we'll still doing all the inspections, but take the lower offer because, you know, sellers are a little bit more vulnerable and they need to sell.
Mm-hmm. Yeah, and it depends. It's going to location. Some areas a little bit farther out are going to be a little bit more vulnerable because as gas prices go up, more people like to live closer in, especially if they're driving to work and some of those things. Now, I think some of the commute situations have changed because so many people are working from home, which is kind of cool. And
That's
that,
true. And so because of that, to piggyback what you just said, Laura, I'm getting a number of buyers who are like, okay, what's the internet service like? I got to have great internet service at this house. I don't want to be somewhere that's remote. I don't want something with, 2015 kind of internet speeds. I need something because I work from home. I'm not commuting. I need the internet. I can't have it crashing because
Mhm,
I'm running meetings, Zoom meetings, or I've got to have
absolutely.
my employer know that I am on the computer and I am at work at home. So internet has been a big thing. And also inside homes, Laura, what buyers are looking for are spaces where they can work. That's separate
Mhm.
from where they play, where they eat, whatever, where they rest. They want to make sure that it's not an open floor concept. They really want more compartmentalized homes now so that they can say, okay, this is my space for work, and that's my space to eat, and that's my space to play or watch TV.
Isn't that interesting? Because, the open floor plan has been very prominent and very sought after. And now, you get that little lifestyle change, and then, those things change, and you get a little bit, maybe some old school stuff going in there.
Exactly, exactly. And I've spoken to a number of home builders, and they're adjusting their interior floor plans to accommodate this new trend in our society of home office spaces, internet access is strong,
Mhm.
quiet, and make sure that they're not getting bombarded by exterior noises.
That's super interesting. I hadn't heard much about that, but I can see how that is very accurate because a lot of people are working from home, and you definitely need to have, your quiet and your, a space where you can operate and kind of keep the kids off of your equipment.
That's right. That's right.
Because
So I tell you what, Laura, let me ask you this. As we wrap up here, what advice can you give to buyers? Or what advice do you give to buyers where in this market right now, it's the fall, not the spring. Interest rates are rising, buying power is lower, things like that. What advice can you give to home buyers who are watching this out there about how to best navigate
Mhm.
this real estate market?
I think it's super important to get, work with a real professional lender that can not only tell you about the market, but show you the evidence of why they're saying what they're saying. Putting those reports and just showing about the history of interest rates, the history of housing, what happens when the Fed raises interest rates, and talk about, the housing market and where we are as far as inventory versus, eligible buyers. And these are all things that I show my buyers. I do, it's kind of back to kindergarten, show and tell, because I'm giving them real hard data, third party data that verifies what I'm saying and how I'm saying it, so that they have the confidence to go out and buy. Because it's okay to buy in this market. You don't have to be afraid. Let other people be afraid, but go boldly and go after those goals. Go after the goal of home ownership. It's a valiant um, achievement to be a homeowner, and it will make a world of difference um, for your whole family in the future. It gives you stability, and rents are not stable at all. Rents are still accelerating between 8 and 10% annually,
Mm-hmm.
which is very unstable, stabilizing for a person's budget. So you get into a house, yes, the rates are up. We all have to agree interest rates are up, but at least it's going to be a fixed rate. You're going to know what your payment is every month. And it's not going to change that very much. Now, the government can change your property taxes, but you do get notifications, and it's not all the time, thank the Lord. And but other than that, you're going to have a very stable house payment that you can rely on. It's a target you can hit every month, and we can curtail some of our other non-necessary payments, our non-necessary spending, and kind of reel ourselves in from the consumer and consumption perspective, so that we can have this stabilizing cornerstone of our finances called our home, our castle, our sanctuary. Create that. And you can improve a house. It's okay. You can buy a house that needs a little love and improve it with your own creativity and your own, be a weekend warrior. Home Depot and Lowe's, favorite places for Saturday mornings. You can meet your friends there and talk about your plans. Take some classes together. How do you do some of these home projects? And make it fun. Get your kids involved, keep them busy, keep them off the computer, keep the TV off. You'll be so much happier. Absolutely. And just wanted to invite people. I'm going to send out an invite. I'm going to be doing a talk on Thursday afternoon about the mindset about money. So there's a lot of things that we got taught or never had a conversation about money, and this can be helpful to people getting ready to buy. Just a different way to think about money and how to get better at getting it and using it.
Excellent. I hope everybody takes you up on that, and thank you for your advice from a lending perspective for home buyers. Thank you for that.
And you too. You brought some great insight to what's happening on the real estate side. And I just think that, you know, fear is false evidence appearing real. And that's what happens when we watch little tiny 30-second bombs that the talking heads on the news, I don't care what channel you watch, they're lobbing them at us. Don't let them take your peace and happiness, everybody out there. Let's still go for our dreams and our goals, and all will be well.
That sounds great. And I would echo that from my perspective, Laura. I'll say to first-time home buyers, just consider your current situation. Know that it'll be better when you do begin your home ownership, especially if you're renting now. And whatever your life situation is, if you have to buy, then I'll help you, and any real estate professional, realtor will help you with the home buying process. And certainly reach out to us if you have any questions.
Absolutely. There's my number. Give me a
Excellent.
call. We can talk about anything that you need to talk about, concerns, worries, and we'll get you on the right track for sure.
Excellent. Until next time, have a great time, everybody.
Thank you. Thank you, Mike.
Take care.